Hello, I'm Ryan from Michigan Youth Empowerment Foundation. Today, I'm going to be giving a brief introduction to investments and stocks. Simply put, an investment is a way to put money to work. Merriam-Webster defines an investment as the action or process of investing money for profit or material result. The main reason people invest is that returns are often higher than the interest rates you get from putting your money in a savings account. There are many different types of investments suitable for many different situations and scenarios. In this video, I will briefly explore just a few, including stocks, bonds, commodities, and real estate. So what are stocks? Stocks are a way for companies to raise money in exchange for ownership of the company. People who own stocks of a certain company effectively own a fraction of that company. Big corporations like Apple and Amazon are collectively owned by hundreds of thousands of shareholders. Stocks, like all other things in this world, follow the law of supply and demand. If more people want to own part of Apple, the stock price will rise, and vice versa. What are bonds? Or more specifically, government bonds? Bonds are basically stocks, but for debt. National governments will sell bonds to their citizens or to other countries to pay back the national debt, with a promise to pay the bond back with interest after a certain time frame, usually a few years. Just like how the value of stocks is tied to shareholder confidence in the company, the value of bonds is tied to bondholder confidence in the ability of the government or company to pay back its debt. However, bonds are seen as a safer investment than stocks because if a company or government goes bankrupt or defaults, the stock gets wiped, but bonds don't necessarily lose their value. What are commodities? Commodities, unlike bonds and stocks, are tangible, meaning that they actually exist in real life. While stocks and bonds exist as certificates, commodities are hard assets. There are four main types of commodities. Energy, which includes crude oil and natural gas, metals, both precious metals like gold and base metals like copper, agriculture, like wheat and cotton, and livestock, such as cows and sheep. Nowadays, commodities are almost always traded online. Commodities, like stocks, can be traded either directly with cash or with derivatives like options and futures. Commodities, like stocks, are volatile, and prices are subject to the laws of supply and demand, among other external factors. Other notable investment types include property and currencies. Property can either be bought in the real world or as REITs, which stand for real estate investment trusts. The main benefit of REITs is the diversification it provides. Because you're investing in a small piece of a basket of properties instead of the entirety of a single property, you reduce your risk exposure. REITs in the real estate market are basically ETFs in stocks. The final main investment type is currency. Currency investment is the trickiest of the bunch because it's much less volatile, which means higher volumes of money are required to make the same profit from stocks or bonds. Currency investing was formerly only used by institutions to diversify their portfolios. However, recently, with the explosion of cryptocurrency, retail investors are also joining in. So, if you have some spare money lying around, what are you waiting for? Start investing today. Start investing today. This video went over a very brief introduction of the four main types of investments. Thank you so much for watching the video to the end. Make sure to subscribe and hit the like button for more instructive videos. If you are further interested, make sure to check the pinned comment for the link to our class on investing.